I still don't know how to start these things. I always sit here and think about it. Like, what's some clever way to start this? It's you know what it is. Welcome back to the Nobel Show. I'm Josh. We got a lot to talk about. Let's get into it. So last week we were dealing with this ridiculous chop that I thought could actually continue for quite a bit longer. All right, it was pretty much stuck in this 407 to 418. And what eventually led to this breakdown was that inflation data was terrible. Now, lots of people, when they're analyzing this inflation data, they were saying, oh, with Target and Walmart saying that they have these big reports of tons of inventory, this will help the prices and that will bring down inflation. So we should see some deflation in the prices of goods as the demand falls off and the supply continues to build. Normal supply and demand mechanics. That didn't really play out to the extent that people were hoping for. And on top of that, services were climbing in their prices as well. The issue here is that prices tend to be really sticky in the services when they'll start to hike up. So when that data came out, we saw that this started to fall off. And if we also look here at the data that we got as well, let me move me out of the way, we could see on the consumer sentiment here that this is looking terrible. And what this usually turns into is a revolving door effect, where as consumers get more and more worried about the economy, they stop spending, and it actually makes the economy even worse until the sentiment begins to change. So this is obviously a really concerning graph. We're seeing lows since the 1980, which was the Great Recession, and everyone's really worried about the state of this economy. Now, if you've been watching the show, we've been talking about this a lot. I mean, just over and over and over. Go watch previous episodes. We've gone over the state of this economy, I think we're already in recession. This has been reciprocated a lot among lots of people in the Discord and among lots of experts. And I've been kind of keeping into the different conversations. And honestly, I'm a little bit tired of how long will inflation last? Will it not continue to last? I see a lot of the patterns that we saw last year continue to build. And just historically, people really suck at timing inflation and having it come back down. And every month we hear people say, this is the top. We're done with this. This will come down. Just like the housing market. Everyone's been saying, this is it. It's going down. It's crashing now. But we've just kind of seen a small pullback, and it kind of just looks like a normal cycle developing in it. And it feels like it could continue to go up. This sucks if you're a millennial like me. Luckily, I have a house, but I just have one house. I want multiple houses. I want it all. I'm just kidding, but a little bit. But the thing is that housing prices and rent prices are probably going to continue to climb. And remember, the data that we get is always backward looking. And so I think that this could just be the new paradigm where, we will eventually enter in this economy where you rent everything and you love it. And just, at least that's what they say. Now, there is, with that sounds like really scary. And whoever approved of that headline report, I think BlackRock was the ones who pitched it like that. Or maybe it was a cover of a magazine. I don't remember. The point is that could be what you have to do. If these prices are so high and then everyone's just renting, rents become more competitive then, hopefully. And these companies can charge cheaper rents because they can average out over all the properties they own if they own everything. Now, this is awful for the consumer, but it might just be the reality of the future and what that looks like. You won't own a piece of the earth, That's what I like. That's how I think of my house is there's a building on the land I own, but I own a piece of the planet. All right. This is my little, corner lot piece of the planet. So anyways, I think it's good to own property. I think real estate has been really profitable, although in the future you could see that start to die down. And that's just something to consider if you're thinking over a long time horizon. Like if you have the ability to get into real estate, or set up some Airbnbs or something, now is probably the time that you want to start looking into that during this kind of pullback in the market, because it could easily just ramp back up. Anyways, as far as the state of the economy goes, as far as predicting inflation goes, the economy, we're going down, and we haven't seen the lows yet. And so I'll bring up a chart in that in a moment. But as far as this inflation conversation goes, I'm kind of done trying to time it, trying to say when it will be done, trying to say, oh, this is the bottom, especially now that we're starting to infect the services and that we're seeing these continue to surprise over and over against, very conflicting consensus. Obviously, there's still some people who are in the hyperinflation camp. I'm not in that camp. I think that sounds kind of unrealistic due to what technology is going to do. We're in this paradigm where biotechnology and AI is going to start entering this market in a more aggressive and infectious ways. It's going to revolutionize a lot of industries and the way we do very common things, and that's going to be very deflationary in nature, just as well as other technology, which is just naturally deflationary. Think about like your TV. That's probably the most obvious one that you can think of. Those just keep getting cheaper and cheaper and cheaper and cheaper. And as it becomes easier to create these technologies and, we rebuild these supply chains, those will come back down. And maybe we'll get some temporary price hikes, but we live in a competitive market. And so that helps with those over time, just like those normal supply demand mechanics. As far as timing, when those will come back down, that's just not a game I want to play anymore. But we'll continue to keep an eye on it. I'll continue to report about it just so that you can stay informed. But that's just kind of where I am on that conversation. It's a little bit exhausting. Now, as far as this market coming into tomorrow, and we're doing a little bit of format. I'm just getting this all out because I actually have a busy day and not much time to get this out. I'm seeing what could be a bounce coming into Monday. We had this aggressive sell-off. The chance that we see a down, these 3 aggressively down days followed by another aggressively down Monday, especially when we don't see much going on this economic calendar. Not much going on Monday, just a speech at 1. So maybe into the close, we see some pullback. But these should be pretty much priced in based off the inflation data. Then you have retail sales. I expect that to be bad, but I expect, obviously you could see the consensus and forecast is already expecting to be bad. Maybe a surprise to the downside could still come in there. Then we'll get the Fed interest rate decision. We might see them get a little bit more aggressive on this. And as you can see, that is also the consensus and forecast is that they're going to start tightening this more even. Then we have some economic projections. I expect this to be nonsense, although we did just see some projections from international banks. The ECB had a super confusing report where the consensus, I think that any informed person who's been paying attention can make, is that they have no clue what they're doing, and they're trying to figure out as it happens. So this will be really interesting, but I expect confusing and conflicting reports and statements to be made here. And so the Fed press conference then will be at 1:30. This is all on Wednesday, okay? So retail sales will be interesting. Look for that to maybe surprise to the downside. You have your interest rate decision, economic projections. Then we have some housing stuff. This is pretty much nothing. Jobless claims will be interesting because these have started to build. And as you can see, consensus forecast is a little bit of a deviation right there in those estimates. And then we have Fed Powell speaking on Friday, which will be interesting. So Wednesday is going to pretty be your important day to watch out there. Now, let's also jump over back to that SPY graph. So I think Monday will come to a bounce, but then let's go ahead and break down some of the charts that have been shown in the Discord. Remember, we got a partnership. We have a hedge fund manager in the Discord. He manages $131 million. He's been sharing lots of content there. Remember, if you want to check out that content, become a subscriber. We're going to soon move a lot of his stuff over there. He's also been making lots of public posts for everyone to view as well. So there's some content, some great content there for you to look at, as well as other people in the Discord always posting things. Our CFA actually was just made a $1,500 put play, which was amazing. I think he bought those right around here, had $400 puts, printed 1,500%, selling down here on Friday. Great play, strong hands on holding all the way down there. So, hey, congrats to him. He did call that out. He's been calling them out as well. Lots of great traders. There's been lots of success. People have been doing really well. I was on vacation during this week, just getting a lot of small scalps. That's pretty much how my trading went. But let's go ahead and move past all that and kind of dip into some charts. And I've been looking at the chop on a graph. You weren't able to see that, but it's okay because we're going to go to some better charts. So what we're looking at here is Elliott waves. Now remember, if you want to know what Elliott waves are, we have a full educational section in the Discord. You're going to go to your technicals here and you're going to read about Elliott waves here. We have a full write-up. This is a great beginner's entry into what Elliott waves are and what your goal is when you're looking for them. I was also thinking about making a few like small educational videos, maybe just some shorts that I put on TikTok, and then I'll also put up on YouTube so that you can analyze those. And this channel, by the way, this is Joe's channel, who's our portfolio managers now in the Discord. We also have a few other people that are wanting to Discord, a few other professionals, a few broker dealer owners actually that I've been networking with, which are really cool to get them in here. And we still have a few other podcasts coming up. I've had a busy, very random schedule and just trying to make meetings wherever I can. So there's also going to be a few more podcasts coming up and stuff. Anyways, let's go ahead and break down this right here. Now, the Elliott waves, you're trying to count these waves, these ups and downs. As you can see, he's got wave 1 and 2 here, then wave 3, 4, and 5. So obviously the play that you would expect to see here is when you see this wave 4 develop at this 385 level down to like 3,500 is probably a really great trade. And that's actually something that we've been talking about. And as you can see, he's even got his time frame down here below. This is kind of what we're seeing played out in May, and then come into July all the way September. We're looking at those pre-COVID highs, which is something we've been talking about for a while. Although I think it helps a lot to see it actually in the graph. And this is what we expect to play out. Small bounce coming into Monday even. Could get that bounce and then gap down, another bounce, and then we're down again. Remember, nothing's going to move straight down. That's why Elliott waves are great. It kind of helps you get some timing for the market. Maybe if you're trying to play all these small bounces and then get out before these drops, this is the kind of way you can do it. Remember, this is not an exact science by any means. Remember, we had 420 set as a possibility, and we only hit 418. That was in the after hours. Technically, the actively trading market only hit 417. So don't look at these and say, this is the hard set level. So I think a few weeks ago, we did perfectly hit some levels I set. That's rare. Okay. So what you're looking for is generally get close. So I wouldn't use these as exact tops and bottoms, but rather just a blueprint for what you think could play out in the market. You know, don't try and hold out to get, you know, to this rate 3850 exactly. Now, remember, if you're trading the S&P, this would be, or SPY rather, I'm sorry. This would be 385. Okay. So this is the SPIX levels. So anyways, that's what we kind of see coming there. This is just one possibility. If you join the Discord, you can see the other charts and possibilities that we have set up and kind of read through those. But this is what I'm expecting to kind of play out over the next few weeks. So earlier in the week, someone asked me, hey, what can I play that isn't USO that still correlates to energy? And actually the heaviest volume for trading energy would be XLE. So today, instead of going over USO, we're going to go over this. So we've been seeing this pullback in the energy sector. And I think that pullback has also been playing out in uranium as well. And I think UNG actually had a small bounce kind of already after its very aggressive pullback. And I actually decided to take a position here, finally playing some natural energy, looking for a bounce there. I think it could go to new highs. So remember last week we talked about how I think energy will continue to go higher, how I'm looking for $100. A small pullback like this isn't the most unexpected thing. I expect these prices to be persistently high. I think after this pullback, we could see a bounce. We could even see this bounce with the market on Monday. And then as the market starts to downtrend again, we'll see this actually continue to climb up. I don't think this is the highest high that we're going to see. I do expect this to climb back up. And if I pull up the two charts here, you can see how tightly this trades with USO. All right, so it's a very tight correlation here. Let me put these on the same time frame so it's a more accurate representation. But as you can see, XLE is a big mover. You're going to have a lot more volume on options contracts there as well if you're looking to trade options in this environment for energy, which is kind of where I've been mostly playing my options, kind of staying away from the stocks. Now, when it comes to the biotech sector, this has been a very aggressive pullback on, we got all the way to 75 on CRISPR. I was really happy with that. And then IBB is going to be our big biotech ETF. It also had a very aggressive pullback, but I love this sector. I love these dips. I like buying into this even as it continues to bleed because I'm so solidified in my confidence in this industry. I think this industry is outpacing AI and its innovations and its adoptions. I think AI has a lot of issues it still needs to resolve. Some of that correlates all the way back to having a better understanding of consciousness and neuroscience that then lay a blueprint for how technology would want to function. And so I think if we can maybe map out some of that in the coming years, then this will continue to bloom. However, I still see it kind of as an early technology when it comes to solving more complex issues. Now, AI in the sense of helping you with your insurance or something, that's here, it's growing and it's gaining adoption. But to the scale that it would do complex problems or, brain integrations, which will, give you instant access to the internet. That's some futurist stuff and some conversations that I feel like could still maybe need another decade to really play out. I still think that when this market does bottom out, let's say we see that 3250 come in, I think those are great buys. I think those are great long-term holds. If you're young and you have a long time frame and you want to hold for a bit and you want Windows to not interrupt videos, just kidding. I think it's a great long-term hold there. And I just the potential there is just stupendous. But the biotechnology, the technology's here. This is what my background's in. I have really high convictions. I hold leaps on IBB. I hold large positions in CRISPR and various other companies that you can hear about if you join the Discord. Welcome to help ask me questions in there. We actually just had a few new traders sign up in there. Definitely utilizing the other traders in the Discord, asking lots of questions, which I always enjoy. I have no problem with that. Just remember that there is an entire educational section built in the Discord that you can review to kind of learn the basics. And then when it comes to actual implementation, we're more than happy to help you set up those strategies or maybe navigate your way to finding your own longevity through your own style of trading, which I think was what I would, not that I think, but is what I would always recommend for everyone who's wanting to do this. You're going to find your own niche, your own style, and it's going to work for you. Just stick with it. And remember, if you want to play that out, give yourself, this is important actually. We're going to go full screen for this part. If you're a new trader and you're trying to figure out your own strategy and you want it to work, you want 50 to 100 trades to determine whether it works, right? So make that money last 50 to 100 trades. Trade like you need to make 50 to 100 trades to figure out if you're good. If you're blown up an account within 10 trades, you do not even give yourself enough time to develop a process whatsoever, but even just the skills to understand how this game is played. Okay, so that's just something that I wanted to throw out there. Hopefully it helps. And so last but not least, we're ending the show a little bit early because I am just exhausted. Had a super busy week, bachelor party, and tons of family stuff, and going here and there and coming back from vacation. Still haven't quite recovered from that. We got a bunch of meetings. I have a bunch of meetings coming up this week. We will be doing some live streams this week. Super pumped about that. But the thing I wanted to end this Sunday report on is the turmoil in the global markets is climbing. All right, the yen's in trouble. We're going to have hunger, widespread global hunger, start to develop over the coming months and into the end of the year, which I think we could also see a bounce in the market heading into the end of the year. We'll talk about that in the future. But the path there is going to be rough, and markets are going to be rough, not just in the U.S., but everywhere. And I can't iterate enough times. Last September, I was beating the drums about this. War is very likely. Global turmoil is very likely. We're not done trying to redevelop some sort of globalization. By that, I mean different trading routes and allies that we trade with, and how playing those out in the organization of things. When countries are not working together, when they're not big trading partners, that's when you see lots of conflicts start to erupt. And without that going on right now, with all this conflict that's already persisting, there is all these sorts of territorial arguments to be had and new lines to be drawn, and there's going to be a power grab. All right, this chaos creates a ladder, or some people see this chaos as a ladder. Shout out to Game of Thrones, and they want to climb it. All right, so they're looking for who's weak, who has a weak spot, where can we put pressure on that weak spot so that we can get ahead. So when oil is a huge issue and supply chains are a huge issue, everyone's currency's collapsing. One, it causes chance of war to continue to climb and become an issue. And we've seen this. China continues to aggress on Taiwan. I think 100 warplanes were flown out recently. We saw a headline on it. It's also hard to verify these headlines, but there is a website that also tracks all the planes that fly into Taiwanese waters, and it's been spiking again. And we've seen China store up food and stuff. This is something you would do before you went to war. So I'm not trying to fearmonger, but I'm just saying be aware of this. There are lots of nations who are adverse to us and lots of nations who are just trying to be opportunistic. They don't care about what's going on with Russia and Ukraine. They just want cheap Russian oil, or they want to just use these conflicts as a way to get cheap goods or just to benefit on them in any way, shape, or form. And they're kind of ambiguous to us, so ambiguous to China and Russia. They're just looking out for themselves. So, and then global inflation is also super high. So weird things happen when inflation gets high. All right, we've already seen crime rates and violent crime at that spike in the U.S., and this will probably continue to trend to the upside. But this also becomes a global thing. All right, when you see countries like Sweden even saying that they have inflation issues, and that's a big deal because Sweden's pretty self-contained. They don't do a lot of exporting or importing. They're very self-sufficient nation. So when even this is affecting them, when even they are saying we're having inflation issues, that's when things get really, really concerning, because it's like, okay, this is hitting everyone globally all at the same time. The chance of a global recession seems really high. Everyone's hurting. Remember, you're in the U.S., so even as bad as it is here, even as bad as that consumer sentiment is here, it's way worse in Europe. And Europe's doing still better than most of the world, all right? They're still top 10%. We're the 1% here in the U.S. They're top 10%. China's over there struggling to keep their head above water, trying to put more stimulus into their markets because they know how bad it's going to be. We're getting reports now that they're out of lockdowns. Now there's rumors that they're going back into lockdowns. It's chaos, all right? So in this environment, be aware black swan events are going to be really high. And even though those Elliott waves levels are set, you could see a quick drop down. A market crash is not outside the realm of possibility in this environment. And we've been seeing people buy the dips, but we've also seen that start to die off. And you should be having a thought in your mind of like, okay, my passive investments, what happens? What do they do when people stop buying the dip? All right. That's just something to think on. But remember, at the same time, over time, markets go up. When that market hits a low, I think it'll be great. There'll be tons of good deals. And I'm still bullish on America. I think we are a great nation who's going through a lot of turmoil. I think we're going to come out on the other side just better off. And why is that? Because we empower the individual. We empower you to the better than anyone else. All right. It doesn't matter if it could be better, because it could for sure. And we can agree on that, but it's a lot better than other countries do. They don't empower their people. You don't see Russia empowering the individual to do as much as they can to benefit themselves, all right? But when you give people these opportunities, they can make great changes and make huge differences on their own. And I think that is the way to create a grand society. And I think despite all this turmoil, I'm bullish on America. I'm bullish on the companies we create. I'm bullish on what we're doing, and I think we're going through a very difficult learning process, but I am hopeful for the future despite everything going on. And trust me, it's going to get bad. It's going to get real bad. Nonetheless, I will see you later this week for probably a few more shows, but for now, I have to get going. Hope you're doing well, and see you in the Discord.